Hello and welcome to this edition of the ID5 Podcast. Today, I have the great pleasure of welcoming Eric Franchi from MathCapital. Eric, good morning, good afternoon.
Still good morning here, Matt. Great to have
great to be with you. Great to have you here. So full disclosure, MathCapital's an investor in ID5, so it's only going to say good things about us. But actually, I'm more interested in what you have to say about the market, right? The idea behind the podcast that we're doing this summer is really to talk about how we can build a sustainable digital advertising industry so that we can continue to fund, the open web and access to content and services with advertising, which is a really big mission, right? It's not just about short-term ad tech project. It's about much bigger than that. So really keen to understand from your standpoint first, right? Do you think digital advertising is growing sustainably? It's certainly growing, right? Double digits and huge opportunity. Is it sustainable? Can we continue to grow that? And now we're building the foundation for a sustainable growth curve for the industry.
Yeah, sure. Given your helpful disclaimer in the beginning that I manage a venture capital fund and I'm invested in almost 50 companies like ID5. Obviously, I'm going to have my bias here because I'm betting the next decades of my life to it. But I believe it's growing sustainably. So I started my career in digital advertising just over 20 years ago. So I've seen the growth over the course of the past 2 decades. That for some it's just lines on an e-marketer chart or bars on an e-marketer chart. So while it's grown at a double-digit compounded annual over the course of the past 20 years or so, if you go year by year, there's been years where it's been up, there's been years where it's been down, because advertising, besides some of the more interesting stuff, that more performance-based marketers who are now becoming sort of the brands of tomorrow are doing, oftentimes it's tied to the economy. So while it's grown over the course of the past 2 decades. It's been ups and downs. That's sort of thought A. Thought B is it's grown and will continue to do so because there's 2 drivers. It's number one, there's still share shift going on. So at first, digital advertising was taking share from print, and then it was taking share from outdoor, and then starting to make its way into TV. There's still, I think, kind of growth vectors coming from share shift, right? So sort of like every dollar that can become digital becomes digital.
Mechanical, right? Like people spend time in front of screens, so obviously dollar is going to follow eyeballs, and so mechanically it's growing. Okay, that makes total sense.
Yeah. So sort of kind of thought B2 is there are probably net new dollars that become digital dollars that are coming from, I think, some of the areas that we think about today, right? So CTV and commerce media, and all those kind of shocks that happened over the course of the past 18 months are all starting to show itself now. I think there's the sort of very sophisticated marketers that are going to be driving a lot of growth. But then the thing that we're excited about is where are the new net new growth vectors for digital. We're starting to see real opportunity in things that are not necessarily tied to screens. So that could be audio, right? So podcasts and streaming. That could be voice. That could be, if we go, play this out over the course of a decade or so, every screen, perhaps in, the cars of tomorrow are not just going to be, Apple and Google Play enabled, but, might have an opportunity to, play video and so on and so forth. So I think it's, share shift. I think it's continual growth organically, and then it's, kind of net new places that will, align to this idea of every dollar that could become a digital dollar becomes a digital dollar.
Okay. Yeah, I get what you're saying. And a big part of that growth has been driven by innovation and new way of doing things that are more efficient than the way we were doing before, right? If you think about programmatic, I think that's quite obvious. And we can talk about over promises sometimes, but in general, I think there's no question about the fact that there has been a massive kind of drive to efficiencies when you think about advertising as a cost of goods sold, right? Which is an idea that was born with digital, right? With techniques where like retargeting, for instance, or really revenue generating investment.
Mm-hmm.
and those are all kind of innovation that have been going through over the past 20 years. You were saying like, technical innovations, business model innovations. What are you seeing right now? Like, you've got a great vantage point, right? You probably see 2-3 years ahead of the rest of us, because you see those business plan that founders are sending you now. So
Yeah.
what do you think are the most kind of significant innovation areas in the industry today?
Yeah, sure. Broadly classify them into 3 buckets. So number one, there's still a ton going on in the, sort of like the infrastructure around data and privacy and identity. I think to me, it's so crucial, so important, so foundational that sort of gets its own pillar. Number two, again, sort of broadly speaking, there's a lot that goes into this. All things automation. Now that's a very, very broad heading, but companies that are taking the parts of the transaction or parts of the ecosystem that have not yet been automated and sort of kind of building next gen infrastructure for that. And then number two, building the sort of next gen applications that come on top of it. I think that's super interesting. And we can break down examples of that if you want, if it's too top level. And then the third is very sort of like kind of broad header, the future of media, the future of content, right? So this can be everything from near term or the past couple of years of investments that we've seen, like tremendous growth, CTV, commerce media. This could be where we think about the future of audio, the future of voice, the future of at home, right? So if we think about it, very simply, it almost goes back to the first principles. If we were to architect this industry, from the start in 2021, right? So we would think about, okay, how do we, do relevant marketing, do relevant advertising in a very relevant, precise, and consumer-friendly way, right? So like, kind of privacy-centric data infrastructure, number one. Number two, okay, how do we build the way to do this on an enterprise level, right? So then that becomes, automation and the applications thereof. And then it's number three, where should the marketing happen, right? And obviously we've got digital at its core, but then there's all these other interesting ways and growth vectors like television and streaming and audio and so on and so forth. So that's the sort of framework that we think about it at with Math Capital. And if you look at the now 48 companies in our current fund, they all align to that vision.
It's really interesting because there are kind of the obvious, right, quote unquote, areas of innovation, which is like really like almost R&D, right? Like let's do new things, right? And let's invent new things. And this is what people, generally consider innovative area. But you're also putting into this kind of under this innovation umbrella, the notion of doing what we do already better and kind of streamlining processes and automating processes and rebuilding infrastructure, which is really interesting because I think it shows how far we've gone as an industry, how far we've grown into, how we've matured, right? Because when you start to think about process optimization, when you start to think about infrastructure, like those are signs not of like a few people trying things on, in a garage, right? It's really like, how do we build the scale? How do we build to continue to grow? And I think that's really that's a really interesting angle to look at innovation from, right?
Yeah, for sure. It might not be the most exciting stuff, right? The exciting stuff is at times it's like how the ad is presented to the user and in what way, and like I'm super bullish on some categories like creative, and we think about that as an area of automation. But like when I started my career and when we started our first company, the sort of kind of forerunner to Undertone, we were receiving our insertion orders from agencies and marketers via fax. That was the only way to get a signed document. And we had this fax machine. It was a small office, way smaller than even the room I'm sitting in right now. It was myself, my co-founder, Mike Cassidy. And it was just a phone that kept ringing, consistently throughout the day. Thankfully, there was a sign of business coming in. And it was like, okay, we now then need to take this piece of paper, start to put the information manually into the system and go from there. So it's boring and unsexy, but it's the sign of a business that has reached enterprise scale.
Yeah, all of you 25-year-old media buyers out there who are listening to this, Welcome to the prehistory of digital advertising.
I won't spend too much time talking about it because the future is way more interesting.
Yeah, definitely is. But I think it's really striking to see how you're looking at this from really like a scalability, industrialization process. Because when we talk about sustainability, well, you can't sustain a whatever that is now, like $500 billion industry or $300 billion industry with like bits and pieces here and there, right? You need to build for scale, and that's where I mean 2 out of 3 of your focus area are that.
Yeah, and not to, again, to maybe bring it down to a level where there's an example, right? I mentioned creative before. I enjoyed the conversation you had with Terry Kawaja about how that's, a real opportunity for growth. So we've got a few investments in companies that are focused on that. Now that we've got so much data, now that we've got a cohort of marketers, sometimes these could be e-commerce brands that have so much of their own data and so much like catalog data, you're talking about the idea of building creative that can be tailored to a user's preferences, that get then pulled from catalogs that can contain hundreds or thousands of different items. There's no person that can create all of the possible, variations of ads that can go into a well-optimized campaign, right? So this idea of bringing in automation, it actually can be tied to creative. It can be tied to some of the more fun stuff to be able to, optimize a campaign that ends up being, extremely sort of like ROI centric and tailored to user preferences, at enterprise scale.
Yeah. So is there, thanks for that. I think that's, and yeah, you're referring to that discussion about creative,
People should listen to that episode. It was good.
Totally agree. Yeah, totally agree that that is an underexplored area. Are there other areas that you're like you see as a potential opportunity, but you don't get enough projects on, right? Things that you're like, I wish like we would transform this part of the business because it's really inefficient, or there's really a lot of value that can be unlocked. Is there any kind of an area that you put a slightly bigger focus on to try and find things there because you've got the gut feeling that it could be improved, or are you getting like more than you can chew?
Yeah, I mean, so over the course of 3.5 years, we've invested in almost 50 companies. We, look at, a couple of dozen companies for every one that we invest in. So, I can tell you from a firsthand basis, like there's a ton of innovation going on out there. But I think, the faster we can get to a way to, sort of like truly prove ROI to marketers across either, sort of like, single channels or across an entire campaign, the more the boat sort of rises for everyone. So, right. Yeah. So, whether that's, sort of like attribution, whether that's, just like more analytics around, truly showing ROI in a way that is, accurate and holistic, the better. And we've got several companies that are working on that. We've got one interesting company called TV Scientific that is really focused on unlocking CTV for performance marketers. And the way they do that is to show, all right, dollar in, how many dollars out. And that's the stuff that I get really excited about, because then it's like the floodgates open and presumably every company in the space benefits.
I totally agree. And I think, I mean, in identity discussion, we're usually very much kind of locked into data and targeting. But actually, when you talk to marketers, right, the biggest application of identity for them is the ability to connect action with performance, right? And like investments tied into results, and how do I make that link at a user level, because that's what they've kind of built into, and that's what they've been accustomed to, and that's where they see value. That's where they can leverage user level data.
Exactly, which is why, like, I think about data and identity as its own pillar, because it all starts with the person, it all starts with the customer, it all starts with the individual, and then you build from there. So not surprisingly, I'm 100% aligned with you.
And so let's talk about identity a bit, and more specifically about identity and privacy, because those are, well, definitely from our standpoint, at least two sides of the same coin, right? But usually they're opposed to each other, right? Usually the market says, well, like privacy goes in the way of user identification or kind of limits our ability to identify. Like, how do you look at this, and how do you think we can balance personalization, one-to-one, kind of data-driven approaches, measurement, right? All those things that rely on an ability to identify a customer and privacy. How do we maintain that balance going forward?
Yeah. So a couple thoughts. I think, number one, we have an incredible opportunity today to rebuild this thing in the right way. Nobody
working on it.
Yeah, it's like, exactly. Nobody really thought about cookies as being the be all end all of, targeted marketing when the cookie was brought forth and started to be used for, behavioral targeting. At best, it's a weak proxy for an individual, and over time it's gotten sort of like less attractive. So I think it's number one, we have an opportunity to build a better way to identify a consumer for all parties involved, right? Both consumers and marketers. So thought A. Thought B is absolutely, if there's a segment of consumers that don't want their information to be used for marketing purposes, absolutely respect that, and put in the infrastructure and the capabilities to do so. But on the other side, if you do a lot of the research, if you go into some of the sort of like meta-analyses, so to speak, most people, if you ask them, they prefer personalized marketing. They prefer marketing that's relevant to them. They prefer learning about things that match their interests. So I think that there's absolutely a way to, build better infrastructure for personalized marketing, do so in a privacy-centric way, do so at scale that allows marketers to, truly provide, a great both marketing and service opportunity to consumers, allow consumers to learn about products and information and content that's relevant for them, and continue the industry's growth trajectory. And the cool thing is, through frankly a lot of the regulation and moves from the browsers, and I realize me saying a cool thing to somebody that's in the guts of it, like you, sounds a little strange. But if you zoom out, it creates the opportunity to build this thing in a way that is sustainable moving forward, and then B, create companies that are going to be like undoubtedly the leaders of tomorrow and super valuable, which is obviously the business that Joe and I have chosen to be in with Math Capital.
Yeah. So I understand the argument around like personalized services, personalized messaging. I think one of the argument that is certainly under leveraged is value exchange, right? Because I agree with you that a big part of the population would rather have messages that are relevant to them than messages that are just random, right? But there's also another dimension to this, which is that content isn't free. Services aren't free, right? Someone needs to pay for it. And if the marketers don't pay for it because you don't want to share data with them, or you don't want to allow some form of limited, right, kind of access to data, then consumers have to pay for it, or they have to accept kind of downgraded versions of the service or whatever. Do you think it's a message that is kind of pushed out there enough? Do you think we're making enough to kind of explain the value exchange to consumers, and to use that as a trade-off really with them, or do you think we could do better there?
It's a really good question. I think that the value exchange conversation has been going on for years now, and it's hard because we have such an insidery view into all of this, and we understand it, and we think that the sort of broader global population does as well. So I don't know. I don't know if this is something that literally like the 7 or 8 billion people that over time will be connected to the internet and consuming content truly understand. So I think it creates a real opportunity for those that empower media companies to connect with people that are viewing their content to really start this conversation in the right way. I think there's really interesting examples of some content companies that do it well, right? Like you go on their property, they whether that's sort of like mobile or web, they have a strong message about like how this whole thing works, done in a very sort of digitally native, fast way. But I feel like there's an opportunity to scale that out across every possible media property, languages, globally. I think it's a must do. I don't have a view on whether or not all of the efforts that the industry has put in has necessarily moved the needle to the extent that it should. What do you think?
Yeah, I think in French there's a say that the boot makers are the ones with the shittiest boots, right? It's like you're not good at practicing your own art, right? And I think we're industry professionals, or we're advertising professionals, but we're really shit at advertising our own value proposition for consumers and brands, right? And I think that's an issue, because in the end, like we can't do this without consumers, right? The whole point of this ecosystem that we're building with advertising and free content and services and brands kind of supporting that content services so that they can reach consumers, it all relies on consumers. And the value chain has been implicit, right? It's been very, the level of explanation we've given and the clarity and the transparency around usage of data and kind of the depth of that relationship and the terms of that value exchange, right? And I don't think we've done a good enough job of explaining that. And now we're in a point where in some cases we have to make that explicit, because we have to have, in Europe, you have to have an opt-in to be able to identify people for advertising purposes and process data, just to be able to do like, hey, you're a male, you're a female, I'm going to show you different ads because I've got different products for you, so it just makes sense. And so it's difficult to kind of put an opt-in on front of a relationship that hasn't been defined before, right? Like, what am I signing up to? Why am I accepting that? So yeah, so I think we can. I mean, if you've seen innovative companies coming up with like ways to engage in that, in that dialogue with consumers, I'd really be excited to look at them, because I think it's really something that has been under leveraged, right? And people have been going after audience, but if you can't monetize that audience, what good does it make? Like, why would you want to get more people on your site if you can't make money from them? Like, it doesn't make any sense. There's an exciting, I think an exciting, I don't know if it's an experiment, if it's fully kind of rolled out right now, but there's a media group called Webedia in Europe, who has one of the leading movie, theater and like screening times and things sites, maybe similar to Fandango, maybe in the US, right? I think that would be the reference. And now you go to the site, they're like, okay, either you consent to us using data for advertising purposes, and this is what we do, and it's very limited, and it's super safe and blah blah blah, or you can pay $2 a month to get access to the content. And it's like, it's clear, you can right or left. You've got two choices. You can't get access to the site unless you say right or left. And I think it's a bit brutal, but that's the real value exchange. It's not like, do I want to? Do I not want to? Like, you go to the restaurant, you're gonna eat something, you're gonna pay, for the food, right? That's like, there's no free content, there's no free services on the internet. There's a bunch of engineers in the back end who've done something. There's like, sales team, there's editors. And I don't think we've done a good enough job at explaining that, right? And I think people not necessarily realize that, when you read the New York Times, there's hundreds of journalists who have contributed, and engineers and people in the back end who've made that article available to you as a consumer, right? Mm-hmm. Somebody has to pay for that. So
yeah. Well, all of those entrepreneurs out there listening that perhaps might be trying to figure out their next big idea, I think you just heard one from Matt.
There you go, consumer dialogue. let's talk about the elephant in the room, or the elephants in the room when we have we talk about privacy and data and identity, which are obviously Google, Facebook, to some extent Facebook, Apple mostly, right?
Never heard
And
of
how
them.
no, well, it's West Coast startups. That may be why you're very East Coast centric, aren't you? No, but I mean, come on, like, it's between us, right? Have they become too big for the sake of the industry? Is it are we past a certain point that they have become a threat to sustainability of digital advertising, or what to innovation, right? I mean, their way to innovate is to acquire. So I guess any good VC will be supportive of that, but at the same time, their dominance is limiting the ability to innovate, because who's going to start a search engine right now? Who's going to start a social network? Who's going to start a mapping service? No one, right? Because they're dominating the space. And so how do you see that dynamic? I mean, it can be scary. And I know, we've completed a funding not so long ago, and when talking to a lot of VCs, they were like, no, we're not touching that space anymore, because it's kind of it's done and dusted, and they're going to run with it. So hopefully there are smart ones who see the opportunity, but yeah, how do you approach this? I mean, we've got trillion-dollar companies here. How do we maintain a vibrant ecosystem, an innovative ecosystem, right?
Yeah.
What's the situation right now?
Yeah, let me give you some thoughts off the top of my head. So this is not the first time that there have been a handful of companies that have had a disproportionate amount of spend that goes to their platforms. Before there was Facebook, Google, Amazon. Leave Apple aside. There was Microsoft, Yahoo, and AOL. And I realized, back then they had like way less share than, the big walled gardens do today. But this is always something that's been, in the foreground of digital advertising. It's somewhat of the nature of it, because, they're, at the end of the day, consumer facing platforms, right? So I think it's, sort of like thought A is, the industry's always had, large companies that have, sort of like been a looming threat to the broader industry and, and innovation. And the industry has continued to grow and, churn out, frankly, new leaders over time, right? So I don't want to minimize it, but this is all I know. Like, this is, basically like what the industry has been for a long time. That said, clearly with the numbers that Google and Facebook do, like, yeah, they're obviously, way too large. They've got, I think way too much of a share. And it is incumbent on, us, frankly, as industry professionals and champions of the open web and sort of like champions of all things innovation, to help find and fund and support those solutions that push back against that. Then on the other side, there's Facebook and Google. Obviously, sort of like have sucked up a lot of the air in the room when it comes to display advertising. But along the way, you've seen the rise of Amazon. You've seen the rise of, to a lesser extent, but still pretty formidable, Snap, TikTok, Pinterest, right? So it's proof that you can build like a really, really large business. While certainly there's a couple of walled gardens that are kind of doing things sort of like disproportionately scaled in one part of the sector. So it's like kind of thought too is it shows that it can be done. And then I think if you zoom out, and again, I'm forced to think on a longer timeline than folks like you that are just slugging it out day to day and maybe not seeing the increments of change that might be happening. The future is guaranteed to no one. A few years ago, there was only a few people that I think could imagine that there would be real threats to some of the dominance of the walled gardens when it comes to regulation and antitrust and all of that, right? So I think their success in the future is not guaranteed. their success in some of the platforms that we discussed, right? The sort of next generation that people might be consuming media, whether that's TV, commerce media, audio, voice, so on and so forth, is not guaranteed. And I think there's an opportunity to frankly build a lot more walled gardens, by leveraging a lot of the technology that, great startups are building.
Yeah, it's almost like their size and their level of dominance is actually an opportunity for the rest of us, right?
Exactly.
They've become too big for their own good, and so they're under a lot of scrutiny from regulators and antitrust bodies, and yeah, that's
exactly. And you can learn from them, right? You can sort of
definitely.
like, yeah, exactly. And capitalize on some of the things that they do. We've got one company we invested in that quite literally helps any sort of retailer or publisher that's not necessarily a content facing publisher spin up a custom ad business in a matter of weeks rather than years, right? And basically build their own walled garden a la Amazon or Walmart. So you can certainly learn from them and start to kind of build around them. And you don't beat a giant enemy by going head on into their massive army. You outflank them, right? If you sort of study history and warfare, and I think smart startups are doing that.
I like that you're saying that, like, we have a collective responsibility to try and kind of push back and balance their power. Is this, I mean, from a funding standpoint, right? Do you look at like strategies that leverage the walled garden as a platform for companies to build on, and saying like, well, we're gonna get into their their tail and kind of benefit from the traction that they're going to give us? Or do you look at things that come as disruptors to them? Is there one or the other, or both?
Yeah, I think history has not been kind to businesses that build on top of certain walled gardens, right? Because sometimes access can be pulled, and all of a sudden your business is gone overnight. There are some companies that we've invested in that with the creative example, right? So I mentioned sort of this idea of building multivariate creative at scale. It's a company called Marpipe we invested in. Super interesting. They help customers build their ads across every platform, one of which being Facebook and Instagram, right? They will help marketers, by virtue of building better creative, probably spend more on Facebook and Instagram, but then also outside of it, right? Because they can understand, what messages work across the broader ecosystems, right? So this idea of, finding businesses that might use walled gardens as a proving ground, that might do some things that, benefit walled gardens, but at the same time be able to take it outside, that's super interesting. But yeah, I mean, for us, trying to, find companies that, might use some of the things that they've learned, whether they were former employees there, right? Or, just, sort of like observe from the outside, and building things for the broader independent open web. That's obviously sort of like core to what we really like to see.
Cool. We're almost at time, so just want to end with the traditional question, traditional now, right, on all of the ID5 podcast sessions, although we don't have that many under our belt. But anyway, it's going to become very traditional. What can we do to ensure that the industry becomes more sustainable? What would your top 3 tips be to make sure that we can ride that wave for the next 10, 20, 30 years, and continue to grow for the benefit of consumers, for the benefit of publishers, for the benefit of brands who have that media to engage with their clients?
Sure. Three thoughts for you. So number one, going back to what we talked about earlier in terms of sort of like how we invest and how we sort of kind of organize the opportunity, is to embrace all of the chaos, right? Embrace everything that's going on with the things you can't control, from like privacy and regulation and changes by the browsers and operating systems, and really take a first principles. Okay, if we were to build this thing today, how would we build it? right? I think starting with first principles thinking is super powerful. So I think that's thought one. Consumer in mind, and empowering marketers. Thought two is in general move faster, right? A lot of the things that we've talked about, on this podcast, such as the value exchange and some of the things like that. These are conversations that the industry has been having for like 5 years.
For years.
So people, let's move faster and do this right and execute. And then number three, some of the most powerful examples of, VCs always talk about adding value, but really like how we think about it is like creating value. Some of the most powerful examples that we've observed, in our time, doing Math Capital, is if we have, like ourselves making an investment in a company, we think about the broader ecosystem of individuals and companies that can benefit from this solution. Start to organize, little groups working together to, take an idea, advance forward, start to scale it. We've seen examples of, like companies being put on the map, marketers, finding like their next great idea, media companies really having a breakthrough. So, starting from first principles, working really fast, but collaborating a heck of a lot more than, the industry might have in the past, I think gives, everybody the best shot of A, starting to shift that balance, from the walled gardens, B, truly having, sort of the next wave of growth, and then C, making it sustainable.
Yeah, I think that's a great set of tips, and totally agree with the notion of collaborating across the industry, as this is an interconnected world, and even more so with the pandemic and all the move towards working remotely with each other. I fully agree with you, and obviously this is, within the ID5 kind of mindset of kind of building identity as an infrastructure for the industry. This is something that we can totally subscribe to.
Yeah, and that's why I give you a ton of credit for just starting a podcast to get people talking about it, get people listening to it. It's, when I'm talking about working together, it could be just small examples like that, where you're pulling in, different voices on a global basis to, advance things forward.
Yeah, it's always a pleasure to speak with you anyway. So I do that for free. I do that without recording if I could, right? If you and I had the time.
Wait a minute, am I paying you?
Well, Eric, it was a real pleasure. Thank you. Thanks a lot for your time and your insights and the really exciting discussions. And to all of you listeners and viewers out there, because we're on Spotify and YouTube as well. Thanks very much for listening. Thanks very much for watching, and we'll see you next time. Thank you.
Thank you.